All right. We are ready to start with our session where we will discuss about Nifty, Bank Nifty and sector rotation. I am Kavita Agrawal, the founder of EXP-Invest, a retail trader stock market services company. And today let's go over the chart of Nifty, Bank Nifty and the intersector charts to see what's going to happen the next week. Now, to recap the previous session, we had noted that in the week before, Nifty had reached the stated resistance level of 17,800. After that, we had predicted that the next week, which is the week just gone by, was going to be rather dovish and correctionary with a support of 17,600. Today, we see that support finally getting achieved and breached. So what's in store for Nifty and where is Bank Nifty headed? While it has still not touched the resistance of 42,600, is that something which is still on the cards, or is Bank Nifty in for an early reversal? So without further delay, let's move towards the chart and we'll begin with Nifty analysis. Alright, so before I show you the chart, few rules. During the session, if you experience any issues with the screen, with my voice, with the sound, just let me know in the comments. Secondly, be responsive, ask your questions. During the session, if there are stocks that you're stuck with, feel free to drop them in the comment section. Between sessions, I will take a look at the comments and answer those stock queries with you, show you the charts and help you out with the resistance, support, target, stop loss, depending on the time horizon. So if you mention the time horizon along with the stock name, it helps me do a better analysis for you. All right. The third thing is just be courteous, be polite in the comments. All right. That's it. Okay. So now you can see my screen. This is the Nifty chart. Don't get intimidated. I just like to follow multiple time frames to make sure that all the time frames are telling the same story. So as usual, we are going to begin with the 3-minute time frame and see what has happened this week first. So to cover the price action of this week, we can see on Monday, Nifty very obediently opened up with a massive gap down, and that gap has not been covered the entire week. It remains open. So I'm going to move this key range to this level right up there. This line that you're seeing is nothing but the 17,800 line marked on the chart. Now since Monday to Friday, that is today, we can see that Nifty tried to keep going up, but here it kept facing a lot of resistance, as a result of which the rally did not sustain. It's very hard to draw like a trend line from here, but let me try to fit something in. Okay, I cannot. There's really nothing there, but yeah, here you can see that before making a turn for the lower level, Nifty has given very textbook kind of candlestick patterns, and today we can see that Nifty has indeed, if we join just 3 lines, Nifty's already reached the resistance as per this, this internal line. Now if I were to just double down this line, then this line stretches a little bit further down towards the next trend line, which is 17,500. Now looking at the 3-minute chart, honestly, I have no reasons to believe that we're going to see a breakout above the level of 17,630. Now the 15-minute chart is also, there is a far off kind of positive divergence right here, if you will call it a positive divergence, which might be an indication that we can see an upside. So here, if an upside indeed does come, because why it is a possibility is because of this massive gap here, right? And even though this gap has been filled, but gaps still have a tendency of exerting some influence on the prices. So we can see that this is the gap which is pretty much acted as the support in the previous range. Now yesterday you can see that, actually not yesterday but Wednesday and Thursday, Nifty had taken a support at the level of 17,600 and given bounce ups, but today the level has been breached. So what can we expect from Nifty now? Secondly, there is another support because of this blue trend line that you can see on the chart. There is a support at 17,500, and if the index does turn up here, I would suggest look out for the resistance at the level of 17,800. Moving on to one higher time frame, the 75-minute chart. Let's see. So 16,800, honestly, the reason why it is highlighted so brightly is because it is my ultimate target on Nifty in this correction. I believe that this support of the previous support of 16,850, 16,900 will be breached momentarily, and we will see a touchdown here. But only time will tell. Right now, we can only approach this level by level. Now, on the 75-minute chart, one thing that makes itself makes itself very prominent is this breakout here. Wrong drawing tool. Is this breakout here above the level of the 200 EMA. 200 EMA of the 75-minute time frame often plays a very important role in the Indian equity market. So here we can see that there was a breakout indeed, but I wouldn't say that the breakout happened on very good volumes. So that kind of is a bit of a warning. On the other hand, if you look at the volume profile on this recent downside, what becomes very evident that all the red candles, that is all the down days that we are seeing, all the down 75, the down periods, we can see that the volume in general is quite high, which lends support to the downtrend which is in motion right now. So I would expect that correction is going to continue, but the level of 17,500 is going to act as some form of support, but probably not strong enough. Now we've reached the daily time frame, and let's see what the daily time frame is telling us after cleaning up the chart a little bit for today's analysis. All right, so on the daily chart, so the most prominent thing that I see on the daily chart, and why this had a marking here, was because I have notified this previously also. But if you look at the rally which has started all the way from this point, which was nothing but the June 22 bottom, this was a pretty good rally, right? And since this rally, every time Nifty came back down, or rather the one time that Nifty came back down, it maintained this level of 40 here. On the prices, you can see that this level has not been breached, but RSI has indeed breached the level already, despite of the fact that there was a higher high on the price. Now this is not very good news, especially because on the price front also we see that Nifty had formed a negative divergence, after which this massive rally began. Now, keeping that in consideration, I do believe that this downtrend is going to continue for a while longer. And here on the resistance front, like I said, 17,800 or even 17,900 will act as a key resistance. So talking of the key support level, now I did mention that 17,500 is the support, but it is not the important support level. The more important support level here would be somewhere around there is 17,004. Actually, the 17,400 support has moved up here because of this trend line slope to 17,500. The problem is that if this trend line gets breached, we are in for deeper waters. So that is a little bit of a concern, but let me just try and clone this trend line to see if I can find. Okay, so this trend line does seem like an important one, and Nifty, after breaching this level, we can expect some support to come in at the level of, like I said, 17,500. But if the support of 17,500 is breached, look out for the level of 17,000 on the charts, right? So that's the analysis of Nifty for you. Now let's move on to the chart of Bank Nifty. Alright, so we have the Bank Nifty chart. Before I start off with the 3 minutes, let me just clean up the chart a little bit. Okay, let's All right, so now we've come to the chart, the 3 minutes chart of Bank Nifty, and in Bank Nifty, as you can see that the weakness on the chart of Bank Nifty is a lot less intense than what we can see on the chart of Nifty, which in itself is a little worrying, because if you're aware of the Dow tenets, it's clearly stated that if there is a divergence between the indices, then, or rather the averages, they used to call it the averages back then when the Dow tenets were created. If there is a divergence between the averages, then that is an early signal of a market reversal. So here we can see that Bank Nifty continues to show signs of strength, whereas Nifty has kind of already given away. That scares me, in the sense, scares me because I personally am only a long side trader, and my exposure to the market is very, very limited and very, very stock specific. So that being said, we can see that Bank Nifty has already started a intraday downside trending channel, and this week it created a new high, whereas if you remember on the chart of Bank Nifty, that did not happen. Bank Nifty started the week with a massive gap down, which is practically absent on the chart of Bank Nifty. Not only that, Monday and Tuesday saw a pretty strong rally, taking the index to a higher level. Now my resistance lies at the level of 42,600, but as you can see this week so far, that has not been breached. That being said, I still believe that Bank Nifty will give it another shot to go and touch that level of 14,600, because 42,600 is a very important level for the Bank Nifty to touch. All right, now coming to the 15-minute chart. Here we can honestly, the 15-minute chart is not giving any massive indication of major weakness yet, other than the fact that there is this RSI negative divergence. So on Bank Nifty, at least, I am expecting another upside to come, where it touches the level of 42,600, gives a good reversal, gives a good negative divergence, and gives us an opportunity to make way for other positions or exit our bank positions with profits. Coming to the 75-minute chart of Bank Nifty, here we can see that there was this resistance near the level of 41,800, which has been breached, and therefore the level of 42,600 as a resistance has become prominent. Another thing that I want to do is I want to actually take you to the chart of Bank Nifty on my layout, which I use regularly. I know this is a little bit messy, but here, because I have the trend lines already drawn and the levels marked, you'll be able to see why I am insisting that 42,600 is a strong zone of resistance. It is actually because of the presence of the trend line that you see right here. So this is the trend line that is, I believe it's going to lend some resistance to the index. And if we look at the 75-minute chart of the index, again, let me just move things out of the way. Again, I'm sorry, it's a little heavy for our new viewers, but the thing in Bank Nifty is that it is giving you an impression that it's a new rally, but like I said, 42,600 is an important resistance zone. And then this correctionary wave, so this is actually just a pullback to this correctionary wave, and I do believe there is going to be another correctionary wave which is going to begin from 42,600 and take the market, rather Bank Nifty, all the way to 37,000. So that's why you have 37,000 right here, because 37,000 is where I expect Bank Nifty to fall all the way to. So that's my analysis of Bank Nifty. With that, let's move on next to the indices intersector chart. All right, so what do we have on the indices today? Let's see. All right, let's move to the 3-minute chart, or the 15-minute chart actually, that's better. All right, let's take Monday as a starting point and zoom a little bit out to get better idea of who led and who lost. All right, so at the beginning of the week itself, we saw the IT sector give a massive crash. That was because of the results of the IT majors, making it really hard for the rest of the sector to stay buoyant this week. So naturally, the loser of the week is the IT sector. After that, let's take a look at CNX 500, which I use as a benchmark for this purpose. And you can see that CNX 500 has been pretty sideways, not very negative. I mean, it's barely down like 1% this week. That being said, let's look at the winners. The clear winner this week has been Bank Nifty. Now, I know you probably can't see the name of Bank Nifty, and I don't know if I can fix that. Let me just yeah, it's just, yeah, there you go. Okay, if I just take CNX IT out of the chart, you're able to see it. No, you're still not. Okay, there you go. So Bank Nifty has been the clear winner of this week, and we did cover the banking charts a couple weeks ago in a market outlook, and I showed you that there is a positive divergence on the public sector bank and the private sector bank charts, and we did discuss that banking stocks might do well for the next couple weeks, and that's exactly what we saw. Massive rally in the banking stocks here. So the public sector bank unit has come out as the winner again, and the exact percentage is becoming a little difficult for me to say, because let me just take a look at this. The IT, okay, let me just remove the IT index for a second there and see if, yeah, so okay, so 2.5% is where CNX the public sector index stands, but during the week on Wednesday it touched a gain of 4.8%, which was quite significant. Close behind that is the FMCG. Now the FMCG sector has been bullish because of the CPI data, which came out positive. There is the public sector enterprises index, which has also done fairly well. But I would like to warn you that a lot of public sector enterprises are showing massive resistance on their charts, and there is a possibility that they might go into a big correction. So if you're holding public sector enterprises, I would suggest you get an expert's opinion. If you want my help with it, I will invite you to connect with me on my Telegram channel, which is right here. I'm going to I'm going to paste the link in the comments for those who would like to connect with me. After all, you're gonna see that link in a bit. But here, as you can see, the next sector on the winners is the pharma sector. There's been a lot of pharma stocks which have done quite well in the last 1 month, and I continue to remain bullish on the pharma sector in general. The CNX consumption is also coming out as a winner. There are a few very good stocks giving very good reversal signals. Stock ideas about these stocks have already been shared with members of EXP-Invest, but if you're looking for new ideas, the consumption sector is definitely one where you should turn your attention to. Next, we have the healthcare, the Bank Nifty, and the CNX Energy. The healthcare sector definitely is showing opportunities, whereas the energy sector is giving somewhat of a mixed signal with what I would say is a positive bias. So like there may be rally, but there may also not be. So there's a little bit of mixed signals, mixed vibes there. The auto sector is obviously already given a good rally, and we can expect some profit booking to come in there. So if you are holding positions in the auto sector, I would suggest you reach out to an expert and get some opinions in place. Okay, so that was the session. I like to keep the sessions a little short, possibly, so that I can give more time to answering your queries. With this, let's move on to the comments and answer the questions that you've piled up for me. All right, so let's see. We have Mr. Dipen asking about Hindustan Lever. All right, Hindustan Lever. So this is an FMCG counter, and all right. So look, FMCG, the Hind Unilever was a great entry back at. Let me share my screen. It becomes really hard to explain without that. So you can see that there was a buying range right here, and this was a very good entry. And now if you look at the chart of Hindi Unilever, it has started to come back down, which is, in order to take a fresh position, what you need to do is to wait for a signal. mm, right now I'm not really seeing a lot of positivity here. It is also on the downward trending channel, part of the downward trending channel on the wider time frame. It has shown a lot of resistance near this level of 2700. So I would avoid making a position in Hindi Unilever for now. It doesn't look really promising. Wait for the stock to come back to the level of 2450. uh, if you can see closely enough on the chart, you might be able to notice this green dot here and this red dot here, which indicates my personal entry and exit in the stock. So that is there. And like I said, on the weekly chart there is a RSI negative divergence, and we haven't seen that correction play out completely. So I believe there is more correction possible in this counter, so stay clear for now. So Raghava is all right. Sorry, we have Manjuna. She's asking about KPIT. KPIT is honestly one of my favorite stocks, and that being said, I would wait for KPIT to come down to a better level to make my entries, or rather to accumulate. But KPIT is like, it's just such a beautiful, such a strong stock that you never know with this. I mean, for long-term accumulation, it's definitely a wonderful counter. Let me just remove the background of this thing. It's very annoying. There is a strong support near the level of 775, and to make further positions, I would wait for that level to come back again, especially to make fresh positions. But if you have existing exposure, then I would say use every 1.5% decline to start accumulating. Okay, let's see. Sajan Jacob ji, hello to you. You would like view on the CSB Bank. So on the chart of CSB, as you can see, the trend is pretty clearly bullish, underlying trend. The long-term trend is what I'm talking about, and here you can see that it is trying to turn back up again, but it's facing a little bit of a hard time doing that. The low that it forged here, it did give a positive divergence before starting out the rally. And the problem is that this rally, despite of having pretty decent momentum, I mean 32% rally in 35 days is not bad at all. The volume profile, I wish it was looking better so I could tell you to take position, but I would not recommend you to make any fresh entry because the stock seems to have moved quite a bit already. So now if you take a position, fresh position, what I feel is that you might be stuck at a higher level, and your risk reward ratio will not be very good. But if you have existing position, you should maintain a stop loss at the level of 268 and aim for a target of 312. Now, for several reasons, I believe it will be hard for CSB to go above the level of 312. So this is the setup that you should go with for now. We have Mr. Manohar with us, and he says he bought Infosys at 1370. Should I add now or wait for long-term view? Okay, so let's take a quick look at Infi. All right, so as you can see on the chart of Infosys, of course, there's been a big gap down. I mean, this is what actually soured the entire mood of the market in the first place, right? That being said, I believe that Infosys is in a little bit of a tough time right now, which is obviously not going to last because, come on, this is Infosys. And on the daily chart also, we can see it has fallen quite a bit, but basis the behavior of the RSI, it does feel like some correction remains to be seen. So if you want to make a fresh position, I would suggest you wait for the level of around 1140 to 1186. Basically wait for the stock to retest the low that it forged on the day right after its result, right? And make some fresh entries there and then hold on for the long term. I have a big target on Infosys on the long term. As you can see, I believe it will go up to at least 1700. And once it's around that level is when I'm going to take a call on whether it looks strong enough to make a higher high. But on that front, I would also like to say that the monthly chart definitely suggests that a lot of steam still left in the stock, and what we're experiencing right now is nothing but a healthy correction. So don't worry, from a long-term perspective, you're in good hands with Infosys. All right, so Bajaj Finance, Mr. Karthik Prabhu, you want to know about Bajaj Finance at 6350? Let's see. Oh, okay. So Bajaj Finance has given a bit of a correction, and I believe it's a good time to start making positions for long term in Bajaj Finance. The short term may not be a very good idea because there's a lot of volatility in the charts. So if you want to participate in the stock for the long term, it's a good idea to start making fresh positions because this is Bajaj Finance, one of the strongest businesses in India right now. And I believe that in this stock you would have a pretty okay, I think there is some malfunctioning happening here, but on the chart of Bajaj Finance, I would honestly make fresh positions for a target of um, around here, which is at 8,000. So long term, of course, the target is a lot lower, but on the medium term, I would expect that kind of a target. And on the downside, you should maintain a stop loss at the level of 5476. All right, so gotta delete this analysis. It's a little old. Yeah. So as you can see, I like to write down notes on my charts because come on, who's gonna be able to remember so many notes about so many stocks? All right, so all right. Uh, Mamta is asking if Reliance is gonna be bullish next week too. Mamta, I don't believe that Reliance is going to be very positive. Firstly, we have the result of Reliance coming out today, which is not expected to be really great. So I believe next week that's going to be a dampening factor for the entire market. So I have a personal target of 2050 on Reliance, and that is where I will start accumulating it again. But for now, I'm not bullish on Reliance for the short term. All right, just hold on. All right, let's see. Moving on. So we have Raghava asking about Ind Hotels. And he says he bought at 305. Should he add more? So Raghava, you bought it at 305 means you got a pretty good entry at the stock. Okay, so what I can see is, at least from the short term perspective, the stock is experiencing a bit of a slowdown momentum. So it's really hard to say whether you should add it or not, because like immediately I would say no, but if the stock came down to say close to this 20 EMA and gave showed a sign of strength, then I would say yes. But then when it's gonna come down to 20 EMA and whether it's gonna show strength, it's very hard to say. I would, however, recommend you to use a trailing stop loss here. Be right below this 20 EMA level at the level of 330, 331 and take it from there. Okay. So Raghava, I hope you found that useful. If you did, please indicate that in the comments. Now, what do we have next? First, let's see how much time do we have left. All right, we have almost reached the end, but I'm going to extend the session by 10 more minutes because we have a lot of queries today. Sun Pharma. So I'm going to look at Sun Pharma for Deepen again. Let's see. So Sun Pharma does look bullish to me. The reversal which it has given from this level looks like a pretty strong one if you just take a look at this positive divergence here. So if you want to make a fresh position, I would say it's not a bad idea. You can go for it. You can go for it. Across all time frames, Sun Pharma is looking pretty positive. If you want to make a position right away, I would suggest you maintain a stop loss somewhere at the level of maintain a stop loss of around 975. Yeah, 975 seems pretty good. If you get stopped out around 975, I would suggest you retry entry at 951. Now you might think it's just 2.5%, why would I bother? But honestly, it matters a lot, especially when you're swing trading, and that's what I assume you're asking for. Now if you're asking for a very long-term perspective in Sun Pharma, then I don't know, from a long-term perspective, I wouldn't really recommend the stock because it's kind of struggling to breach above this trend line. So if you want to hold it for the long term, I would want to see it break above the level of it's difficult to give a level because it's a trend line with a slope, so the target keeps changing, but I would want to wait to see the stock break above this trend line in order to hold a position for the long term. That's also because of the reason that there is a negative divergence which is formed near the top. So that doesn't give me a lot of confidence with respect to the long-term viability of Sun Pharma at this point. But if you want to hold it for the short term, then again your target would be the trend line itself, or actually rather your first target would be the level of 1060, which is around 7% from the current market price. So with a stop loss of I would say 1.5–2%, you can hold the stock for a target of around 7%. All right, so we have Miss Shwetashri. She's asking about TVS Motor. So I'm assuming that you're asking for TVS Motor for a fresh entry. And we can see that TVS Motor has shown a lot of strong momentum in the recent times, along with a followed by a positive divergence here. And as you can see now that it is giving some correction. The problem with TVS Motor is that on the weekly time frame, it is showing a lot of weakness, a huge RSI negative divergence, which makes me believe that the stock is going to head into a correction soon enough. And in the sector rotation also, we discussed that it might be time to start booking profits in your auto stocks. So in TVS Motor, I would expect a correction of around 30%, which would coincide with the 200 EMA on the weekly chart, this blue trend line right here, the previous peak, and lots of other reasons. And if you also look at the volume profile, the rally which we've seen in the last 4 weeks has not happened against very good volume, so that is a little bit of a worry. Plus on the other hand, the decline that we have witnessed this week has indeed happened on very, very strong volumes, which is another cause of worry. So that is the reason why I would not recommend you to make a fresh position or a fresh entry in TVS Motor. We have Mr. Praveen who's asking for Carousel. Let's see if I can analyze Carousel, because never really looked at this chart before. So I don't really have a feel of how this chart moves. Yeah, no, this is the only viable trend line that I can see. Let's just clone my trend lines and try to get a sense of the direction of the stock. That seems right. So as we can see that this recent most trend line has been breached, and I would expect the stock to continue falling. So see, right now, because I don't see any massive indication of strength on the chart, it's very hard for me to say that it's okay to buy it. Because when you're allocating your capital in any counter, you need to have a very strong basis to do that, because buying any stock means putting your capital to risk, and in the stock market you have to be very careful where you choose to risk your capital. Even the intraday charts are not looking very promising and are giving a far off indication of some weakness. So there might be a very short term, like 2% kind of rally, but then I would expect the stock to fall further 4 to 5% lower. So if it does that, then maybe you should consider it on the basis of what the chart's saying. I would suggest you to get in touch with an expert to get the opinion before putting your money in. All right, Muthu Kumar ji, aapko bhi hello. Mr. Harish Kumar ji, I've answered Infosys already. I hope you were present to listen to that. Rahul is asking about Keso Ram Industries. So let's take a quick look at Keso. Okay, weekly, monthly, let's see. No trend lines. Okay, that means I'm gonna have to draw them. So there is a mild uptrend there, and let's see, this is an important price point. This is another important price points with a lot of activity there. That seems like a spike. All right, so we'll also extend one to the top and another to the peak. All right, now let's move on to the weekly time frame and see if there are any major points that we might have missed. So this internal zone looks pretty important, so we're gonna mark that up, and let's move to the daily time frame. So see, oh sorry. So on the so we can see that Keso is a stock which tends to move in like big cycles, big very unidirectional moves, and it has indeed given a bottom formation back in the March of 20, and it also corrected it quite a bit. I'm going to move this trend line here. Let's see. If I would like to know how much this was corrected. This was corrected around 38.2%. Okay, and there was a positive divergence. The rally still looks pretty strong on the daily and 75-minute chart, sort of also on the 15-minute chart. However, I personally would want to wait a little bit more for a better entry point, because it seems really close to very strong resistance. So the first zone where you should look out for a potential entry would be around 10-12% lower, near the level of 13%. And if you're holding out the stock for a long term, then I would suggest you maintain a stop loss of 53. And if the stock gives a conclusive breakout above the level of 68, then you can, buy it and hold it for long time with, but again your stop loss would be much higher, which is something that makes me uncomfortable. But I believe the next target for the stock, if it gives a breakout above 68, 70 kind of level, the target would be around the level of 164. Let's move on to the next stock. We have Mr. Virat Chopra asking about CESE. So IDBI first, IDFC first. I'll have to check that out. Let's see. First, let's talk about CESE. I would not suggest you to make any position. It looks like it's gonna get into correction. So that's out. IDFC first bank. I am bullish on this one for sure because of multiple reasons. First being that this zone right here, 52.75, is acting as a super strong support. So if you wanna enter, plus the stock has formed this higher high and it has given a breakout from this triangle kind of formation which was underway. So I think it's looking pretty bullish. You should, however, maintain a stop loss near the level of 53. Now, as you can see, the stop loss at 53 becomes a little steep in the sense that it's 5%. But then that's still okay because the target again on this one is on the bigger side. I mean, the first target I would expect to be at 78 rupees, which from the current level itself is at around 40% rally. So, it's quite fantastic. So that's my view for you, Mr. Virat Chopra. If you enjoyed that, please do leave a positive comment below. We have Rohan Sathe. He's asking about Hindalco. Yeah, a little bit of a mixed signal, I would say. The best entry point has actually already been missed, so your stop loss would be quite inflated. I think there are, for a short trend, for a short term, I think there are much better ideas out there. The volume profile is also not very promising. The volume looks like it's already started to decline on the green days, and it started to increase on the red days, which is not very promising. So I'm not very keen about Hindalco at the moment. So Manohar Pamela G is asking about Biocon, whether you should make a fresh entry or not. So for Biocon, I would suggest that you wait out a little bit for it to retest maybe the recent low and see what it does, because it's in a pretty strong downtrend, and for a stock which has been in such sharp downside, it's very difficult to predict the exact low. So I would recommend you to wait out and see what the stock does over the next month rather than jumping in with your money. REC, Bhanu Teja ji, you're asking about REC and PFC. Please avoid both of them. I was looking at the charts just this morning and I am very bearish on REC, PFC and NTPC. So please look out. All right, we have Zomato. We have an inquiry for Zomato by Mr. Rao. So Zomato is giving some positive signal with a little bit of positive divergence. So if you wanted to make a position now, I would say don't, because it's kind of a missed point. But yeah, if it comes back down to around 50 rupees, then go for it. But now it's a little bit late. All right, so that's that. Now let's see. We have an inquiry for Page Industry by Mr. Sathe. So let's take a look at Page industry, honestly, I am personally bullish on page industry. I do believe that it's fallen quite a bit and it's time for a rally. Today it's given a beautiful breakout and good volumes. Makes me really, really happy. Okay, so what I would suggest is, but the problem is that it's not a very good time for a fresh entry. So just wait for the stock to come back down to a little bit of a normalized level. Let it give some correction. Maybe it will come down to the level of around 38,700. Try to make an entry there, but for now, don't. So, Mr. Sathe, I hope you found that helpful. You are right that page industry is breaking out, but you have to be a little bit smarter about your entry. So, just wait for it to give a little bit of correction next week when we're expecting the whole market to be bearish. Then you take your grab at it. Okay, we have Mr. Dipain asking about Ashapura Mines. Yeah, I feel like Ashapura Mines is a bit of a missed train, so it's a no-go. Same for Manapuram. But let me just take a chart. Take a look at the chart. Yeah, missed train, no-go. See, always try to enter stocks before the rally rather than after the rally, because you know when you're getting tempted to enter stocks after rally, you're basically telling the big sharks out there that, hey, you made money, congratulations, it was because of me, so here's more of my money, take this away while you know I take your losses. So don't do that. Don't ever allow temptation to enter stocks which have already rallied to, you know, allocate your capital. Short term view on ITC, Mahesh ji, I'm not very bullish on ITC. I feel like it started to show some divergences, negative divergences, and it may get into correction sometime soon. So I would suggest you to avoid it. Mamta is asking about Dr. Reddy. Reddy, what did I do wrong there? That's what I did wrong. Okay. Yeah, Dr. Reddy again, missed train. So fresh entry is not recommended here. I would consider it if it came around the level of say 4650, 46 or rather 4700, but not right now. It's too heated up. It's giving sideways consolidation. It's a very good signal of, you know, it's probably going to take a breather. Not a good time to make a fresh entry. Kanak Raji is asking about Lux Industries Limited. So Lux Industries has fallen quite a bit. Massive green candle. I would not want to put my money in. I would wait to see how it unfolds. A lot of times, you know, stocks which are at the bottom can give such sharp movements. But it's not a very good idea to often act on that, because you know we might get stuck at the higher levels of these stocks, which might continue to then go into the bearish momentum. So I would suggest that you avoid it. Yeah, sorry about that. All right, so with that we have come to an end. So also it's time. We've overhit the limit on the time in today's session, but I would like to thank you all so much for joining in. I will see you again on Monday with the Retail Traders Special Series, where I bring to you one topic and I discuss it in details, and the idea is to help you out becoming a better trader yourself. So if you have any suggestions, feel free to join my Telegram channel and post your comments. There is a chat group linked to my channel, and it's a very fruitful conversation happening there. We're discussing a lot of charts, a lot of opportunities, and you know everything is great. So I hope you'll join that. I hope I'll see you there. So for today's session, again, thank you so much for joining in. I will see you on Monday. Until then, have a great weekend. Thank you and namaste.